and the bottom line to put their plan in.
Thank you, everybody, for joining us. For those of you that I don't know, my name is Bret Schanzenbach, and I am the president and CEO of the Carlsbad Chamber of Commerce. And I'm happy to host this today with both for those of you watching us currently live and those who watch this recording later. Thank you for taking the time. And John, go ahead and advance. The thing about this program today is that the Chamber is just like all of you. We are a small business who is not only looking for ways to bring great benefits to our own team, but then we're also looking for how can we bring great benefits to our members. And so we had a 401k when I arrived 2 years ago at the Carlsbad Chamber, but John, who's on this call and who this is his quote, he approached me and said this very thing: the best way to take a look at our 401k is to benchmark it. And I asked him to do that and to benchmark our current plan with other options that were out there, because I wanted to know that as a leader for my team, and we're a relatively small team with just 10 of us in the office, but as a leader of a small team, I wanted to make sure that we were doing the best we could for our staff and our employees. And through that process, we came to find out that there's other options out there. And go ahead, John. So today, what you're going to see and you're going to hear from is a great team, a team of advisors here. Well, John's an advisor, but then Greg from TAG and Bret from Transamerica are all, I've come to know them now over the last year and a half, top-notch professionals who have something I think is pretty exciting for our membership to witness and get to see, something that we are excited about at the Chamber because it's been already an asset to us. And so they're going to be presenting today. And so what you're going to hear about, John, go ahead, is you're going to hear about the changes in different laws. You're going to hear about CARES Act and Secure Act and this act and that act and CalSavers and all these things that honestly are just can be a little bit confusing to me as a leader of a small business. But then what are some options in regards to all those? And ultimately, we're going to share with you the plan as well that the Chamber has put together, an aggregate plan that our members can take advantage of and what those advantages are to them. So that's kind of the overview of today. Go ahead, John. And I really get to just turn it over now to this amazing team that I teased up a little bit, and I'll be quiet now and just listen. So John, take it away.
Thanks, Bret. Bret referred to a couple of the acts. So the two big ones are the Secure Act and CARES Act. And then Bret with two T's, that's Bret Gallinger from Transamerica, will talk about CalSavers, which is a state mandate. And then finally, Greg Merriman from TAG will talk about, what is an aggregation type plan like the Chamber has implemented. And to brag on the Chamber a bit, they are truly a thought leader now in the country, one of a few chambers now that are, and the numbers are rapidly growing, of association type organizations that are now turning around and offering these plans as a member benefit because they are just so much better. And the way that I like to describe it is that if I was to sell my financial services firm and get hired by corporate America, and they said, hey, we want you to oversee our plan, I would be trying to get the plan into an aggregation plan as soon as I could, because it would save me time, trouble, liability, everything. It's just, there's just no comparison. Okay, so what happened is in 2019, there was this amazing legislative package that was being put in place that looked awesome, but they were having trouble passing it through Congress. And then suddenly they attached it to a budget bill right at the end of the year. And lo and behold, suddenly it happened. And some of the key things that were in there, it introduced a new term called PEP, or pooled employer plans, just another word for aggregation. And they introduced some more favorable rules that go along with that. We actually like the term co-op because that kind of tells you what the plan is. You're in cooperation with other companies to get a great deal. they increased the tax credit. So for those of you who are considering a new plan right now, there's never been a better tax credit situation to support plan startup of a new plan. So in the past, it was $500 tax credit for 1 year. Now it can be as much as $5,000 for each of the first 3 years of a new plan. It's $250 per non-highly compensated employee per year. So if you have 20 employees or more, you could get that full 5,000, which was going to cover a lot of the costs. There's a lot of nuances in there too. I think it's 50%, up to 50% of the total startup cost or something like that. If you combine those two items above, if you combine the aggregation plan with the new tax credits, wow, you got a fantastic business-friendly way to start up a new plan as compared to going to the state-run CalSavers program. They also introduced some fiduciary relief in providing a income provider. That's a code word for annuities. They also introduced a new eligibility for part-time employees. I'll be covering that a little bit more. That's one of the things you got to follow up with starting in 2021. They also allowed you to access your 401k savings for adoptions or births. And then they raised the 401k auto enroll caps. That's where, for example, if you have a plan and a new employee comes in and they are kind of not engaged with the 401k plan, then they automatically get enrolled at a certain percentage. That's a very common feature of a 401k plan now. So those caps of those percentages were increased. Continuing on the Secure Act, the RMD, required minimum distributions, were delayed out to age 72 from age 70.5. And so if you turn 70.5 prior to 1/1/2020, then you're under the old rules. They now no longer have contributions to an IRA capped by age. So if you work into your 70s or 80s or 90s, you can still be socking away money and avoiding tax, putting it in your IRA. Those lifetime income options were made portable. And then whenever they do new legislation like this that can actually cost the government money in the sense that they're not going to get as much taxes, now they have to come up with some ideas that are going to bring more taxes in because they want the new legislation to be revenue neutral. So they said, okay, we'll just put bigger penalties on plan sponsors when they fail to do things on time or make a mistake. So that's another reason why having a aggregation type plan would be a great benefit, because that you offload that to the plan and you don't have to worry as much about it. They also eliminated the stretch IRA, which means that if you inherited IRA, like let's say your parents passed away and they had an IRA that you inherit, you got to spend that within 10 years. And so then the ink had barely dried on the legislation of the Secure Act right at the end of 2019. And then lo and behold, the pandemic hits us. And now the government, in like a very short time, incredibly fast, put together this CARES Act, which was designed to both help individuals and companies to deal with suddenly having to be shut down because of the pandemic. So it was designed to blunt the economic impact of COVID. It gave plan sponsors the ability to add some new temporary features to their plan as desired. They can kind of pick and choose which things they wanted to do. And normally these kind of changes would take years to be put on. You could temporarily increase the maximum loan amount, a loan against your balance in the 401k plan, to the lesser of 100% or $100,000. But you have the temporary ability to delay repayment of loans that you have on your 401k back to the end, from the date of this legislation to the end of the year, 2020. And then they made RMD optional for 2020 as well. You could, they delayed tax returns, if you recall, by 3 months, which also impacted individuals contributing to retirement accounts. There was also the PPP and EIDL loans in there. Student loans, those with loans were allowed to not pay them for some period of time. There was also one in there about companies could pay $5,250 tax-free to employees towards the payment of their student loans that would be tax-free. But it seems that very few plans adopted any of these temporary features. And I'd be curious to hear when we get to the Q&A session for people that are on that have a 401k plan. But my experience with the plans we oversee is that very few plans adopted the temporary features, and very few participants wanted to potentially reduce their final retirement amount by taking larger loans or by spending the money or delaying the repayment of loans. So that was good to witness. You know, people see the 401k as being an important part of their overall financial planning, and they wanted to not touch that and let that keep going. And that was really neat to see. So now that I've given you a quick recap of what is Secure Act and what is CARES Act, let's talk about what are the things you should be paying attention to now. When I say paying attention to these things, most of these are things that your admin support of your plan should be doing for you, but you need to be aware of them and make sure you're talking with your admin. The first one that adds in a new area of potential issues is that they're now allowing what they call long-term part-time employees to be able to sock away money in the 401k plan. I mean, they're demanding that long-term part-time employees are able to put money into the plan. And so the act says that the employers must allow these long-term part-time employees, which would be defined as having 500 or more hours working in 2021, 22, 23, and then they can start making contributions in 24. And it's a consecutive 3-year period moving forward. Well, if you go with the baseline requirement here, that means you're going to have some way administratively of keeping track of, you know, who has worked 500 hours 3 years in a row, therefore must be able to contribute. So one option, if you're ready to count hours and have a system and a method for that, you know, to put in place, that's fine. But you might want to just say, we're going to have a more relaxed policy. We're just going to allow all part-time employees to contribute to the plan. I mean, that would, if I was the business owner, that's what I would do. Of course, it all depends on your situation and how many part-time employees you have. The act says, though, that employers do not have to match those long-term part-time employees, and they don't have to offer profit share to those long-term part-time employees. And I note here that the definition of full-time, by the way, for 401k purposes is 1,000 hours in a year, more than 1,000 hours in a year. So, so long-term part-time employees is something that you need to be thinking about starting now. And you have to think about, are we going to change our plan documents and you know, have a particular policy that's at least at this level or better to serve your part-time employees. Qualified birth and adoption distributions. The way this works is that you can take out $5,000 out of your 401k plan money for each qualified birth or adoption. And then you can have the option of later returning those funds with no questions asked. So the question is this a feature your plan wants to adopt? And if so, work with your administrator to modify the plan docs and make sure that the record keeper has the ability to handle that. Like maybe a form has to be filled out, things like that. And I assure you, the record keepers are very good at creating forms to fill out. There's a little dig on my friend Bret Gallinger. CARES Act 2021 to-dos. Okay, so it's okay now what I'm doing is I just told you with the Secure Act, which was passed at the end of 2019, I just told you a couple things you need to be thinking about for that in the year 2021. What about things you should be thinking about for 2021 for the CARES Act, which was the supposedly temporary legislation that was going to end basically at the end of 2020? Well, first of all, if your company did not use any of the temporary 401k features available through the CARES Act, you probably have no to-dos. And of course, with all of this, you want to be working with the administrative support of your plan closely to know if you have anything to do or not. Now, if your company did implement any of the CARES Act features, Then you need to work with your admin, whether it be a bundled admin or a TPA, which is unbundled admin. So when you look at 401k plans, the admin can be kind of built in with the record keeper, or it might be a separate entity from the record keeper. That's what I'm referring to there. Or if you have an aggregation plan, you work with your 316 administrative fiduciary, like in the case of Carlsbad Chamber, that would be Tag Resources. And you want to seek guidance to make sure everything's being tracked and that specific employees that, for example, took early distributions or took larger loans or delayed paying loans, all those things that were suddenly allowed, you need to make sure that all that's being tracked and that these employers are being apprised as to when they need to restart paying their loans and all those sorts of things. So it's going to be pretty complex because there's a lot of different things that have to be managed. That's another reason why I'm glad, I guess, for the whole country that not too many plans adopted these features, because they do create a lot of complexity going into the next several years with managing it all. And then also there was another bill, which I haven't mentioned as a separate bill, but they on 12/28 of 20, so just a couple months ago, they actually in another bill added some extensions to aspects of the CARES Act. And I've tried to capture them here a little bit. It was a stimulus bill. And there was one thing was that certain companies is the way it was phrased, certain companies that laid off or furloughed employees due to the pandemic can avoid a partial plan termination. So it gives employers time to rehire their employees and not have to do a partial plan termination. And so there's some details there. I don't think there's any reason to go into that right now. And then there's something called a money purchase pension plan, which some small companies have that they use in concert with their 401k plan. And those have been added as a plan from which COVID-related distributions can now be taken out of. That was added in that stimulus act, sorry. And also the other non-401k, some of the other non-401k related features of the CARES Act, like allowing companies to pay 5250 tax-free towards student loans, that was extended. And also allowing unused FSA dollars to be spent later were extended as well. So normally what happens with your flexible spending account is that when you get to the end of the year, they maybe only allow a little bit of money to still be spent, and all the rest, if you don't spend it, you lose it. Use it or lose it. But they said, okay, because of COVID, we're allowed people to have longer time to spend their FSA dollars before they lose them. All right. And this is my last slide. The CARES Act 2021 to-dos continued. Now the CARES Act to-dos are dependent upon the extent of the impact on your employee population. So when you look at the extended CARES Act situation, my point I'm trying to make is that if you're thinking, well, should I look at some of these things that they extended into 2021 for the CARES Act, I would take a look at your employee population and just see how are they doing. I mean, if you have a stressed employee population, then by all means, look at all those things, talk to your admin person, see what features might be worth doing to help your employees. So see if your employees are still hurting in 2021, talk with management, and then with your admin support to determine what features make sense to extend. But at the same time, remember that the overall purpose of the 401k is to hopefully help people arrive into their later years of life with a nice nest egg that they can use in retirement. And so it's sort of a balance between how much they're hurting now versus how much they might be hurting when they, arrive to retirement, not as prepared as they could be. So we're going to have Q&A at the very end. So if you have questions, if you can hold on, that'd be great. And now I'm going to turn it over to Bret Gallinger of Transamerica. He's I'm not sure if I have this title perfect, but he's a regional vice president and a very highly thought of individual in the marketplace. And I'm very honored to be working with him and working on the Chamber's 401k. So I'm going to turn it over to Bret to talk about what CalSavers is.
Perfect. Well, first off, thank you, John, for that introduction. And it's just a fancy title. We all know that, right? I hope I'm a wealth of knowledge for everyone that I help out in the 401k space. So I do work for Transamerica. I am the regional VP for them, covering Southern California. So I work with small businesses across Southern California of all different sizes. And so I'm very familiar with all the information that's being presented to you today. What the Carlsbad Chamber has, I think, is one of the best programs. And I know Greg from TAG is going to touch on what that program is. But just a little background, Transamerica is a record keeper. Basically, we house all the investments. We are the tools that you get to use once you log on the website. We house everything. So we're basically the foundation of a house, if I had to compare it to something. Everything else is on top of that. So that's what Transamerica is. We're a top 5 record keeper in the industry and rapidly growing. So what I wanted to talk about today was the CalSavers program. Give you a high level of what it is, how it's going to affect your business, and then talk about some pros and cons. So first off, let's just talk high level about what CalSavers is. I think every legislation that gets presented to small businesses from the state level in the initial stage it's meant to be good, if we're being honest. They try to help small businesses. The problem is when it comes to execution, does it really help the small businesses? So CalSavers was enacted last year for companies that had over 100 employees. And the idea behind it is there's 7.5 million people that don't have access to a 401k or retirement plan in the state of California. So California looked at it and said, well, we need something for those individuals to be able to have something to retire on. I personally think it is. California looked at Social Security and said, that's running short. I don't know how long that's going to be here for. We need to make sure people are saving so that we're not on the hook, right? The government isn't on the hook. I think there's always a little bit of an agenda behind the fact. But that being said, they came forward with the CalSavers program. So what is the CalSavers program? Simply put, it's a Roth IRA program that's run by the state. All right. So they started last year at companies that had over 100 employees. You either had to have a retirement plan in place or you had to be signing up, right, for a retirement plan and register that you're signing up currently for a retirement plan. If you didn't, you faced all different kinds of fines. So what they currently did is they said, here's a Roth IRA. This is an option that the state's going to give you. Okay. Essentially, what a Roth IRA, it allows you to put away as an individual anywhere between $6,000 and $7,000, depending on your age. The state-run program, like it sounds, is run by the state. They third-partied out some of the stuff behind the scenes. So they have a limited investment lineup. The first $1,000 that goes into it will end up being into a money market fund run by the state of California. So I don't know about you, but I don't like the state running any of my stuff. And if you don't sign up for a retirement plan and you had over 100 employees last year, you were hit with a nice fine of $750 per employee that you had. Fast forward to today, they have brought it down to 50 employees this year. So CalSavers program will have, if you have 50 or more employees this year, by June 30th, you will need to sign up for either the CalSavers program or start a retirement plan. Next year, 2022, it's going to go down to 5. So high level, it's a Roth IRA program. It's what I mean by Roth, for those of you that don't understand, it's already taxed. So the government says, thank you very much. I'm taking my money out. Then you guys can invest it, right? And take it out later on without some of the tax implications. So they wanted to get their money up front. They didn't want to allow you to do a traditional, which allows you to put tax in pre-tax, basically, money. That's how I would describe it. So if you don't mind going to the next slide, John. So why is this beneficial? Why would someone want to go into it? The idea behind it, once again, wise idea. They're trying to make this as a program for companies and for individuals to be able to get access to a retirement plan. I think it's in nature. They had good behind it. It's just the execution is very difficult to do. So if you pay little in taxes, you really don't need a break in your taxes, right? If you had a traditional IRA, which you would get some tax breaks for a traditional IRA to lower your tax bracket. So that's why the Roth IRA for lower income, it's a decent decision, right? It's not a bad thing because they're already going to be probably in the lower tax bracket as is with pre-tax. The state tries to make it a benefit to the employees, saying it's no cost to the business owner. So from a business owner's perspective, they say there's no cost to the business owner. What they don't tell you is the amount of work that you have to put in to get this thing up and running, which I'll touch on in a minute. From the participant level, all the fees are pushed down to the participant or the employees within the company. They range depending on your investment selection, but they're over 1% typically for an individual, and those are taken out quarterly from your account. So, the state claims that the owner liability is waived. I don't agree with that at all. I think there's still liability that the owner has. So let's talk about an owner of a business and what you can expect, what to do, and why you may want to look at other alternatives here. So first off, as an owner of a business, you have to make this available to all of your employees. You have to re-enroll people that elected not to enroll or opted out every 2 years. So you have to be able to track who's enrolled, who's not enrolled, and you have to re-enroll those people that weren't enrolled every 2 years. If you don't sign up for this and you have 50 or more employees, you can face a fine of up to $750 per employee you have. And I've seen those notes go out to many companies last year that had over 100 employees that elected, I'm not going to do this. It's COVID. I'm not going to worry about it. And they got hit with a nice little fine, to say the least. I've seen some of the letters, and they're not pretty letters to receive. The other aspect, there's auto enrollment within the CalSavers program, right? So they're automatically going to enroll everyone in your company. You have to opt out. There's auto escalation. So when you're automatically enrolled, 5% is automatically taken out of your paycheck every single period. What does that mean? Well, that means your payroll provider, your HR staff, has to upload payroll to the CalSavers website every pay period and make sure that they have a designated amount coming out of your check as an employee for that period of time. This is the part where it's a little sticky, where they say there's no liability for the owner. If they don't do that, can they be liable? There's a lot of gray stuff out there right now. We don't know. No one sued the state yet for faulty uploads of payroll within the state-run programs. And this isn't the only state-run program. Oregon, Illinois, more and more states are coming out with this because they see an opportunity, to get a little bit of revenue, but also to control some things, I think, in my opinion. So when we talk about liability, they're not taking on all the liability because the owner still has a responsibility to upload payroll on bi-weekly or whenever you do payroll and make sure that contributions are made. The other thing is there's going to be auto escalation when it comes to your contribution. So they're automatically going to increase how much you're contributing as an employee by 1% all the way up to 8%. So when I enroll, I'm automatically enrolled in this program. My company says we're doing it. They send over all the census data to the state through the CalSavers website. I may not even realize it, but there's 5% taken out of my check. If I didn't opt out of auto escalation, which I have to log in, I have to figure out where on the website to do that, and I have to click a button saying I do not want my account to pull more money out next year, it'll automatically increase by 1% up to 8% total. The other issues that we're seeing happen is Roth IRAs are great, but high net worth individuals technically can't invest in a Roth IRA. So if you're a business owner or you're a high net worth salesperson or one of the managers in your company that makes over a certain threshold, I think this year it's 125,000, technically you're not supposed to be able to utilize a Roth IRA feature. There's no benefit at that point. And in fact, you actually could potentially have to pay back some things to the IRS if you utilize those. They don't tell you that, and they're not going to track that. So once again, the onus is on the individual and the business owner. So as much as they say, hey, this is totally, business owners are in the clear, I don't think that's the case. And they haven't come out with verbiage saying that either. So that's the other thing. The last thing I'll say is what really makes this difficult. And once again, I think this is a good program if someone doesn't want to deal with the 401k, right? They're a little nervous about the 401k. They think it's too time consuming. I would say this to you as a business owner. The amount of time you're going to put into CalSavers is exactly the amount of time that you're going to put into the 401k, but you're going to have a lot more liability with CalSavers, with the Aggregate program that Carlsbad Chamber is presenting you. you're not actually acting in a true fiduciary capacity. TAG is taking off about 99% of that fiduciary capacity in the program, and they're signing the 5,500 for you, which is filed with the IRS. So you're really mitigating yourself as a business owner, any potential issues that could come up. So if I'm comparing and contrasting, CalSavers, great program in nature, limited investment lineup. There is work for the business owners to have to do. This year, it's 50 or more employees. You have to sign up. If you have a 401k, you have to opt out. On the CalSavers website, you have to go in and opt out. If you do not sign up for a retirement plan, you will get hit with a fine if you do not also sign up for CalSavers. So that's a huge one that makes sure, as a business owner, everyone out there, if you're not going to do a 401k, go sign up for CalSavers so you don't get fined. The last thing I want anyone to have is get fined for something. A 401k, from a business owner's perspective, you're going to be able to put away more money. You're going to have a matching capability, right? You're going to get bigger deductions as a company. So tax deductions within a 401k, anything attributed to a 401k is a tax write-off, essentially. There's some caveats with that. I'm not a tax expert, but most things that are attributed to that, you can put away more money. That's a huge one. I'll say that one more time. $6,000 for an IRA, $19,000 for a 401k. If I'm sitting there and I want to stack away more money for retirement, I think a 401k is a better option. You can choose a Roth option or a traditional option in the 401k. Right now in CalSavers, it's just a Roth. So you're already pre-taxed, right? On the 401k side, you have the option, Roth or traditional, however you want to set it up. And there's a lot more plan design things that we can do to maximize the amount of money you can put into a 401k compared to what you can do with just a traditional Roth IRA. And the business gets really no benefit other than more work for the HR representative. So very high level. When it comes to CalSavers, once again, state-run program. 401k is going to be an individual run program governed by ERISA and the Department of Labor. CalSavers isn't governed by those, right? It's run separately by a state of trustees. I think there's 7 or 8 people that are monitoring this program. You're going to get dedicated support on the 401k. CalSavers, you're getting a 1-800 line. And I challenge anyone, if you want to see how great the service is, give the line a call, ask some questions, see how long the wait time is, and then make your decision. So I think I'm going to pass it over to Greg from TAG. Greg has been a great partner of Transamerica. TAG Resources, for anyone that doesn't know, is a third-party administrator that's been working with Transamerica for over 20 years. They're a great partner of mine, and they've done a significant amount of business, not only for Carlsbad Chamber, but many other chambers across the country have elected to take on Transamerica and TAG Resources as this aggregate program, and it's only growing. Every day, people are coming to us asking for this program. So you guys were a thought leader. You put this in place over a year ago and made this offering to all of your members, which I think is a great value that you guys brought to the table. So Greg, take it away.
Thanks, Bret.
Sorry, I had to get me off of mute. So thanks so much, Bret and John, for the opportunity. And I won't bore people with a lot of ERISA codes and all those things and get down in the weeds, but truly, this is an aggregation program. And what does that mean? It's simply as it is. It's an aggregation or a combination of businesses, regardless of size, regardless of industry, regardless of asset balance, or a startup that can come together under a single bundled solution, i.e. the Carlsbad Chamber retirement solution, to gather the benefits, as John states there, cost competitiveness, for economies of scale, to address cost containment, administration, exposure, and liability. And we'll talk about those things. And the Carlsbad Chamber was a leader within the industry, within the other chambers, in really over a year ago, coming together, utilizing all of the assets that they had to really benchmark, vet companies to put together a solution just for you. To address those very things. They didn't want just the generic traditional plans or someone going out and talking to their members in regard to just a traditional 401k, but something truly that brought value, not just cost, but brought value in what was there. So what did they bring? It's called an aggregation or an association plan or an exchange model in which TAG acts as the signatory name fiduciary, and we'll talk about what that means. And the TPA, as Bret mentioned, a 338 investment manager, as well as Transamerica as a record keeper, and then John is a financial advisor, or as I like to say, a three-legged stool that builds a foundation for you to have your 401k upon. How does that benefit you? As John is saying in the slides here, in a traditional plan, all the liability, the exposure, and everything of a 401k lies solely on the shoulders of that plan sponsor or any individual that's making up any kind of decision on behalf of that plan. Unlike a traditional plan, the Carlsbad Chamber retirement solution tag acts in that capacity, eliminating that exposure and liability to the absolute maximum allowed by law, taking on the day-to-day administration of that plan, as well as completing signing the Form 5500 as the signatory named fiduciary. So you're looking at a solution that, again, I repeat, cost containment, administration, exposure, and liability, the very things that companies were looking at prior to COVID, but especially now that we're coming out of COVID, looking at companies that are looking to get their business back up and running again, bringing their employees back in, looking to bring customers, clients, members, everything back into it as they were over a year ago. That's a daunting task. So the last thing they need to do is worry about administering a 401k plan, but yet they need to have a 401k plan and a robust benefit package to attract and retain those better employees that, let's face it, all employers are facing today. So that's truly what the Carlsbad Chamber of Commerce retirement solution is doing. We are the helper, as John likes to state it in this. We are the ones that are doing that on behalf of the employers. We are the ones that are doing the things on behalf of the employees to ensure that the plan is compliant, to ensure that they're not missing anything, to ensure that the personal exposure and liability are being handled in a way that they don't have that type of exposure and liability. We're helping with the day-to-day, the weekly, the quarterly, the annual tasks that typically would fall onto the shoulders of that plan sponsor or that company owner. Why does this make sense? It makes sense today because if you hear in 2021, as John was stating with the Secure Act and everything that came with that, there's going to be a lot of different solutions, traditional single employer plan solutions, PEPs or pooled employer plan solution, MEPs, multiple employer plan solutions, group plan solutions, group of plan solutions, association plan, all these things that are out there are going to be established in 2021. All of them looking to have what the Carlsbad Chamber already has: cost to competitiveness, scalability, pricing in place to address a startup plan or a plan with over $100 million. It's built and comprised to address all companies, regardless of size, which again is truly a benefit to all the members of the Carlsbad Chamber, because you're going to have varying size, each one of you, and each one of the businesses. They're going to be brand new businesses trying to satisfy the CalSavers requirement. Businesses that already have a plan looking to address cost containment or administration, or looking for a better benchmark, things that they're required to do as a fiduciary. So the Carlsbad Chamber had this in mind when they introduced this solution over a year ago, sort of had to put it on shelf. And now that we're coming out of COVID, really getting it back into the front of all the chamber members to really identify what some of your needs are and really how they're being addressed by the chamber themselves. And then when you look at it from that aspect, you take the chamber solution, and it's well-known providers, as I've said. They did not go out and work with people that are hoping to do something correct. They partnered with Transamerica, one of the top record keepers in the industry, Tag Resources, which is the oldest and largest 402A signatory named fiduciary in the country, O'Reilly Wealth Advisors, one of the best renowned and operated wealth advisors within the community, within California and the industry itself. So they went out and they put together a team on your behalf that they know would be able to accommodate and address the issues that would be facing you on a daily basis. As an employee, they're not going to notice that much. They're not going to see the things in the background. They're not going to see the data administration. They're just going to have the assurity that the plan is being run properly. And when they call into Transamerica or they log into the Transamerica website, that everything is there. Everything is concise. Their assets, they're being able to see their balance. They're being able to see how they're progressing toward being able to say yes or no when they reach retirement age. So they're really not going to see a lot of difference of what this particular solution does. But the plan sponsor, that's a totally different story. They're going to be working with TAG resources on a daily basis for plan administration, knowing that the plan is handled properly, that it's addressed properly, that it's administered properly, and it is compliant. So if there ever is a knock on the door or a letter in the mail or a phone call from the DOL requesting an audit, they know their plan is going to be compliant, and that TAG, acting that fiduciary capacity, is going to facilitate that audit with the DOL on their behalf. And to date, after 20 plus years, we've never had a TAG administered plan fail a DOL audit, nor had a participant lawsuit. Knock on wood that we never do. But that's all we do. TAG only acts as a fiduciary. We have over 100 employees in Knoxville, Tennessee that on a daily basis do nothing but fiduciary compliance and administration for 401k plans. So when you look at it from that aspect, again, we're providing, or the chamber is providing, a solution that addresses all the aspects that either keep a business owner up until 3 o'clock in the morning or wake them up at 3 o'clock in the morning about their business in general. We're addressing those very issues within the 401k, things that a traditional 401k just cannot nor will not. So really the Carlsbad Chamber has put together and introducing a solution to the members that really is the leaders in the industry from that aspect. And
You want me to take this one? You want me to take this one, Greg?
You can.
Okay, so, and thank you very much, Greg. That was a great summary about these plans. So the question I have here is, why would I not want an aggregation plan? And that's a good point. I mean, I can't imagine in a situation you wouldn't have it. As I said, if I was suddenly brought back into corporate America and asked to run a plan, I would right away want to benchmark my plan against other individual plans as well as the TAG resources plan, and seriously consider an aggregation plan. So the best way to do this is not to just make some willy-nilly decision, but as a plan sponsor who has a fiduciary responsibility, you want to act with facts, and you want to act in a very methodical way that becomes a good fiduciary. And that means benchmarking your plan. So if you have an existing plan, benchmark it and ask that reach out to me, and we'll make sure that included in your benchmark is the TAG resources plan through the Chamber of Commerce. Then armed with those facts, then you can make an informed decision as a fiduciary. Another question would be, I don't have a plan. I see the CalSavers law deadline coming at me. What should I do? Well, it's really the same thing. It's just that even though you don't have a plan, what you do is you make an informed guess on, if I had a plan now, how many people would I have participating, and what would the overall plan balance be at the end of year one? We're not trying to put you in a corner to make a great guess. You just need to make some sort of a guess to give us a starting point. And then we basically benchmark the plan that you would have at the end of year one based on your estimate of how much money would go into the plan and how many participants you would have. And that way, with that point established, we can see how would that plan benchmark against other standalone plans and against the aggregation plan. And once again, then you can make an informed decision as to what direction you want to go. And then it was mentioned earlier, the fact that even if you have a plan in place and you're thinking to yourself, oh, I don't need to worry about this CalSavers deal because I already got a plan for my company. Well, guess what? The state says you got to go to their website and you go through this multiple step process to get exempted from the requirement. So you go to that website there shown, and you look for begin exemption, and then you get some sort of access code, and you start through this laborious process to make sure that your plan is registered, and so the state knows officially that you actually have a plan in place. So with that, I'm going to turn it back to Bret Schanzenbach for some closing words of wisdom. And now that he's seen the whole presentation, he may have had some things come up in his mind about this whole 401k scenario that we're in right now. And then we also are opening it up to Q&A. So with that, I'll turn it over to Bret.
Thanks, John. Yeah, so I'll be brief. My main thing as the person in charge of our company at the Chamber was I have enough on my plate running the business itself, keeping track of all the different nuances and laws and regulations that change on the 401k side, plus making sure that we actually have the best thing in place for our team is not something that I enjoy or relish. I have quite a bit on my plate as it is. So I wanted to have a plan that I knew did the best for our company and did, but then took away, as Greg talked about, that liability. You know, I just wanted to go with something that was trusted and that covered us. So we had good investment opportunities, but that stayed compliant with all the different moving pieces and parts. And so that's why I was really excited when John showed me not only could we save money, but we could reduce our liability, we could reduce our time that we spent on this and still have fantastic options for our team. And when he also presented it that we could do this in a way that could make it available to our members and provide them with something that they could tap into, I was all about it. So very excited to see this presentation. And as Greg mentioned, you know, we did one presentation to roll this out last year and then COVID hit. And so everything got put on the back burner. So we're excited about finally getting to roll this out in a bigger way, and would be open to any questions. Of course, they will be answering. I probably don't have the answers, but this team here does. So if you have a question, I think I saw earlier, maybe Jennifer raised your hand, I think, or somebody raised a hand on the system. So if you have it, unmute yourself and go ahead and ask a question. You are so bold. Anyone? Right. Don't leave without your questions being answered. Anyone?
Hi, it's Jen. Sorry, I was on mute and then I didn't realize that I was talking on mute. But I actually just had a really simple question. I think I missed. When is it? When's the requirement for employees going for 5 to 50? Was that for next year? Is that the requirement? Is that Jan 1 or is that June 30th of next year?
It's June 30th of 22. And keep in mind that it can take a couple of months to get a plan in place, depending on what you're doing. So, you know, really, I would think of the deadline as being more like March of 22 to give yourself plenty of time. Okay.
So it is about a 3 month leeway to get it set up.
Yeah, when you set it up, there's certain notifications that have to go out by law, you know, and so when you start adding up the different periods of time, it adds up to a couple months. I think Greg or Bret Gallinger could probably elaborate on that timing a little bit better.
On a startup plan, it's typically 6 to 8 weeks. Sometimes we can do it quicker, but typically 6 to 8 weeks.
Okay, perfect. Thank you so much.
Yeah, and so then somebody's asking, Karen's asking if the speakers, if you guys wouldn't mind putting your contact information in the chat if people had follow-up questions. John, I know O'Reilly, you're here local and are very accessible, and the other team is spread out over different parts of the country. But if you guys who are able, if you could put your contact information into the chat so that people, when they, you know, an hour from now get another question that they didn't think of while they were here and they would love to do a follow-up, that would be great.
Yeah, I think it's probably better, and not that I'm trying to shield anybody from my experts, Greg and Bret, but they're not necessarily designed to deal directly with you guys. And they probably would send you back to me anyway, but I'm happy to get you whatever you could possibly need. So I'm putting my contact information in here.
Perfect. Thank you, John.
Yep.
Yeah, so from Transamerica, we work through advisors. So yeah, if you guys reached out to John, with questions. And, if you had concern about the record keeper, he could get me in contact with you. We require an advisor on every single 401k that Transamerica does, because we see a huge value in that.
Excellent.
Absolutely. I agree. Everything should run through John.
Perfect. Thanks, guys. So John did put his contact info in there. And any other thoughts or questions? If you do have an existing 401k, which is great, it did likewise take us a couple of months as we transitioned from our existing plan, because we had one. We transitioned from that plan into this aggregate plan. I think it took us about 8 weeks-ish, something like that. So it does take a little bit of transition there, but John guided us through, and these guys were in the background, and happy to say, now I have it. I have a nice little app with Transamerica on my smartphone, and I can look it up and see where I'm at personally. I'm an employee as well, obviously, of my own company, so I can see where I'm at, and I like that feature, being able to do that. I didn't have that before with my old 401k. So any other questions that anybody has for any of our guest speakers?
Yeah, I'll leave with one comment if you don't mind, Bret. I'll say this. I know CalSavers seems like a heavy lift, and so does a 401k for a business owner with all you guys are going through. The transition, if you have an existing one, isn't as big as a lift as you think, right? You're going to have help along the way from a transition manager over at TAG, as well as a new plan. We're going to walk you through the steps. I don't want you guys to think, oh my gosh, it just seems like it's too much work. It's really not. You have a great advisor, John O'Reilly, that's going to help you, as well as everyone in the back office from Transamerica and TAG Resources. So I just want to rest assured, if you guys are looking to do the 401k route, it's not as heavy lift as you might think with all these rules and regulations that we went over today. Don't let that scare you from making that choice.
Yeah, I think the interesting thing about, all the timing, all this stuff is that, if you have as I refer to it, as an extra helper, the fancy name is ERISA 316 Administrative Fiduciary. Right now is the perfect time to have that, because otherwise you're going to be more worried about all these new acts, the Secure Act and the CARES Act and all that stuff. That's all being handled for you in the background. You don't have to become an expert on it. That's kind of what's ironic about having this 401k workshop, because my advice would be have an aggregation plan so you don't have to attend 401k workshops.
And I do want to echo what Brett Gallagher said, that they were holding our hands the whole way through transitioning. So they made it as painless as humanly possible. And so we're really happy to have arrived. So with that, any final questions for our panel? Okay, I want to thank you guys so much for taking the time to present and share. Thank you, John, for setting this up, and to Greg and Brett for being here.
Thank you.
Yeah, and if any of you guys have questions going forward, I know John plopped his information in the chat. I should probably do the same. I think everybody knows where to get a hold of me, because I probably emailed you in the first place, but I will share mine as well. And for those of you that are not familiar with how to save the chat, one nice little feature, if you're not, you're probably all Zoom experts, but just in case, if you go down and click the chat, once you open it, in the lower right-hand corner, you'll see these 3 little dots. And if you hover over it, it says more. When you click on that, the very first option says save chat. And if you do that, you'll be able to save onto your local PC or your local computer the chat that was in the discussion today, and then you'll have that contact information. So we'll give you a moment to do that, but otherwise we're going to close out. Wish everybody a great rest of the day, and enjoy March Madness. Go Aztecs. God bless everybody. See ya.
All right,
Thanks
guys.
so much. Have a great week.
Thank you.